traders. This is Etsy. This is Nick, actually, looking at Etsy. Okay, it's a marketplace where you sell your own stuff, crafts or whatever. Pretty popular among the people who use it. I tried it a couple of times. Not my jam, but pretty popular. So they recently reported and got hammered. Don't know if it's so much as their report or the day around which they reported. So Monday on the 5th of August, the whole market fell over 1,000 points as far as the Dow is concerned, the S&P over 100 points. So it was a bad day. And regardless of how good your report is, you're not going to hold up. So the stock fell. I don't know the fundamentals very well, but it almost doesn't matter at this point. All I know is, I listened to the CEO or somebody in management talk. The one thing I didn't like about it is that, so the fundamental is 61 PE, which is pretty darn expensive. But then again, it's a new company, 10 times sales, almost 11 times sales. Not that crazy. To give you a relative, Amazon is 4 times sales. PE of Amazon is more than this, but it's Amazon. So back to my point about the CEO, he sounded, first of all, refers to all of his people as she. Bugs me. Reminds me of the old brick and mortar retailers like Macy's and all of that. Their stocks their companies are dying on the vine, and they still stick to their old ways. They're hot set. They don't want to change. This, I'm hoping, is different because it's just a different venue. It's online. It's dynamic. I can't imagine he's like them. But anyway, I'll give him the benefit of the doubt for now. So fundamentally, it has basis. So it comes down to price. So this is a daily chart, 1 year. So it gives you a good perspective that it's still up on the year. This was where it started, but not by much because of where that candle is. But it's well off the highs, which is a good thing. So is it an opportunity? Yes, for a trade. So here's what I'm looking at. In fact, I'm going to mark it up. Before I forget, at the end, there'll be a subscribe button to YouTube. It's free. I post videos. Okay, so this right here is an important period of time and an important level. Why is it an important level? Because of this. So, I guess this. Sometime in last December, they tried to break out. Whoa. While the whole market was falling, they were rallying. Okay, so they tried to break out and failed at 57.5. Most probably because of how the market did right here. The market died into Christmas. The whole market, stock market. So maybe this failure was not due to Etsy. So this spike should have happened here. But it didn't. They fell back to where they came from. Good support. Back to it. And they struggled. And then they finally did it. Boom. Okay. They defended it. They defended it. They are defending it. So you're saying, okay, well, they're not defending it right here. It doesn't really matter. $5 in a stock like this, I know it's big percentage-wise, but it's a zone. What zone am I talking about? I'm talking about this zone right here. So why do I pick this zone right here? Because of this level here, and it's consolidated. What does that mean? They fought over it for a while, and especially this one right here. Okay, that was the last pinch right here, this little box. Ding, 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 boom. They didn't do this. They could have done this, and on good volume. And I'm looking left and looking. This is the biggest volume. So this right here counts a lot. Boy, that's a lot of coloring. I'll recolor it at the end. So right here is in the middle of that box. This tells me it's a pivot. That's the definition of a pivot. A place where something happened, something changed. So when they're falling into it, that zone, not a hard line in the sand, should be support on the way down, resistance if they were going up. So in this case, I can assume it's going to be support. Okay, so Etsy right here is a better long than a short. Now we have a gap here, we have a gap here, not so much, but anyway, here we had a gap, that's gone. So that's all good. So how do I chase it? I can buy the shares and hold them forever. They're 52, 53, 54, 5, 6, wherever I get in. Under $60. I'm going to hold them and see if I can make money off of it. And then I'll put a stop based on my own preference. Some people don't mind seeing a lot of red. Some people want to get out at 10% loss, 15, 5, whatever. Everybody's different. I can buy the calls and hold them. Now, when I do that, that's my least favorite because time is an enemy. So I want to go out in time. I don't want to buy the calls for next week or the week after unless I have an event I'm playing. In this case, the event is gone. So I want time on my side. So why not December? Okay, and if I do December, then I can do some call calendars, call diagonals, call verticals against it. So it gives me time. I can withstand a red tick here and there. Okay, buying calls is a losing proposition just from the statistics. They say most options expire worthless. That means the buyers lose. So I'd rather, which brings me to the third way of going long, sell. Sell what? I'd rather sell puts in it. Puts or put spreads. What does that mean? If I sell a put, I commit to buying it. So it's like me having a conversation with Joe Blow out there or Jane Doe out there saying, hey, you know what? I know you have Etsy stock. I know you're nervous. I'll buy them from you if they hit 45. I just made up a number. So they say, oh, great. So here's $1 for your efforts to me for my insurance policy. I'll take the $1 right now per contract. That covers 100 shares. So I take the money, it goes into my account. All I have to do is buy their share at 45, which is another $10 lower from here. So roughly 20%. And that's my maximum risk, is me having to buy Etsy 20% cheaper than it is right now. That's it. I don't give back the $1 or anything. So my break-even point would be $1 lower. Now, I made up that premium. Let's go find out what the premium is in real life. All right, so we're looking at a chart, a daily chart, and let's flip to the options chain. This is a tongue twister for me. All right, so this is Etsy today, up 3%, up another little bit after market closed. So just side note, why do I bother with options? Up 2.5%, 2.7% on the day, right? So yay, if I owned it. It's up 20% if I owned options. As long as I guess correctly, options offer a bigger bang for the buck for sure. So this is a contract that has only 10 days. That's not what I'm looking at. But first order of business is this is a thin market. I don't like to do that. So even another side note, not a lot of volume. Not bad, but not a lot. So out to December. That 45 number I made up, I said $1, it's 270. So it's a volatile stock. It has 136 days. So in essence, I want to sell somebody insurance for the next 136 days. I want to tell them, I'll buy your shares if they fall below X. So let's go to 40. So my risk will start at 40, but I collected $1.55 for it. So my break even is $1.55 below 40. So just this is where you decide. 40 is where I want to sell it because you don't mind suffering below 38.50-ish, okay, with fees and all that. So this is where the personal preference comes in. What if somebody's, you know what, I want even more assurances. This is a new stock. Then I'd go to 35. So I'd tell that person, I won't buy it until it hits 35. So my break-even point would be somewhere around 34.20-ish. Maybe at 30. So my break-even point would be at 29.50. But I only collect 50. The closer I come to current price, the higher the premium. This is like selling insurance to reckless drivers. If you sell the insurance to somebody who races cars, you're going to charge them $650 because you know they're 50-50 shot of getting into a wreck, which is the odds of winning here. But the further out from current price, this is where the colors change, the cheaper the premium because you're driving in the desert with no trees and not a lot of people around you. So you're not going to get into a wreck. Same concept here. I'm selling somebody insurance. So somebody wants to sleep better knowing that they can't lose money below 40. They would pay me $1.55 per contract for me to insure their stock. If Etsy falls below 40, I have to buy it. I have to buy it. I can't say, no, I changed my mind. I have to buy it at 40. So if I can't afford to buy it, I'll sell a spread. What does that mean? I'll sell this one and I'll buy that one. And the difference, let's say it's $1, that's the maximum I can make. So this limits my profit from $2.70 down to $1, but I can sleep well knowing, I'm using round numbers. Now I can sleep well knowing that my maximum loss is the difference, $4. It's a $5 spread, and I'm collecting $1 up front, so the maximum I can lose is $4. If it goes to 0, I have to buy it at 45, but I own the right to sell it at 40. Hopefully that makes sense. So these are several ways I can go along Etsy, and this is for the next 130 days. And there's noise coming out from the outside, so this is the perfect time to end it. Again, Etsy is from the chart, looks like a decent bet. Now, provided the whole market holds up. Okay, so if the whole market still has a stupid tizzy with China, then it's a different conversation. I'm going to go to a weekly chart, and you can tell that it has had good days, but it came out of the box badly. But taking a long time to recover is good news, because that just makes this move right here from 33 emphatic, because they moved above the first day of trading and never looked back. And now what they're doing is, these are weekly candles now, they're setting levels. Remember that big important candle I said in the box? That's the biggest volume right here. That's an important level. This is where they're at right now in this weekly candle. So this whole core is well defined. One thing I don't like is that they're losing a trend line. So now onus on the bulls would be to earn a rally, which makes me happier to sell puts than buy calls, because now onus on the bulls. The bulls have to prove that, hey, you know what, we deserve to be here above the trend lines below that we just lost. But if I sell a put, I don't really care. I don't even need a rally to win. They can lose another 15%, I'd still be just fine. So this difference between selling puts and buying calls and hoping. This was an actual trade on Etsy for somebody that likes the company. Again, fundamentally, I'm not a fan, but I don't hate it. And more importantly, it has a lot of fans on CNBC, so you know somebody's going to be fighting for you there.